one fund, on point for today, the expert to talk about it. Welcome to the ETF of the week. Yes, it's the ETF of the week, where we examine trending, new, newsworthy, unique, and intriguing exchange-traded funds with Todd Rosenbluth, the head of research at VettaFi. And if you go to VettaFi.com, you'll find all the tools and research that you need to make yourself a better investor in ETFs. Todd Rosenbluth, Happy New Year. It's great to chat with you again.
Great to be back, Chuck. Happy New Year.
Your ETF of the week is
the Fidelity Blue Chip Growth ETF, FBCG.
FBCG, the Fidelity Blue Chip Growth ETF. Now, of course, this is the ETF companion to one of the oldest, old line, most successful funds out there, the Fidelity Blue Chip Growth Fund, which is FBGRX. So why this fund and ETF version now?
Well, this is the ETF of the week, so we're going to talk about an ETF, not a mutual fund. But the Fidelity Blue Chip Growth ETF had a tremendous year in 2024. It significantly outperformed its peers. It did so in back-to-back years. It's repeated its success. So in the last 2 calendar years, it's been among the top-performing large-cap growth strategies, let alone being an ETF. But what we like about it is people are talking about whether or not we're going to see a shift in momentum, shift in focus, those mega cap growth stocks, whether they can continue to have their success. We're not sure if they can or they can't, but here, with the help of Fidelity, you get the expertise of an active manager and the efficiency and liquidity of an ETF. So proven manager, proven track record, almost exactly the same strategy that people know of in the ETF wrapper.
It is, but I got to start with one thing. You know, when I was young and learning about investing, blue chip was thrown out all the time. Today, it's not. It's not a term that's used very much. And I'm not sure that most young investors or new investors truly know what a blue chip stock means. Because today, blue chips is just another way of normally saying large cap growth. Or is it more complicated than that? And is there a real benefit to blue chip as a definition in the name here?
So blue chip to me means quality. That's synonymous with the term quality. Blue chip is a phrase that's used more often within the active management world because it's in the there's subjectivity as to whether a company is high quality enough to make it into the portfolio. If we look, and people should look at what's inside the portfolio, they're going to see a lot of those mega cap growth stocks that led the market the last couple of years. So NVIDIA and Apple and Microsoft, those are most likely to be in there. But what's compelling to me is there's more than that. Carvana was one of the success stories for this ETF in 2024, according to Fidelity's fact sheet and additional information. So that's a stock that people probably are familiar with, but it's not necessarily those mega cap growth stocks. So it's worth looking inside the portfolio to see whether your or somebody's objective definition of blue chip meets the criteria for what's inside the fund. But I think of it as another way of quality growth companies.
I know we're here to talk ETFs and not mutual funds, but there are some things that would make people want to compare the two. And I know that you prefer the ETF wrapper. In fact, everyone tends to prefer the ETF wrapper these days. That's why the ETF side of the business is growing and the traditional mutual fund business is slowing. But here's an interesting fact for you about Fidelity Blue Chip Growth, the ETF, FBCG, versus Fidelity Blue Chip Growth, the fund. In 2023, FBCG, the ETF, was up just under, a hair under 58%. And in 2024, it was a hair over 39%. Meanwhile, the mutual fund, well, in 2023, it was 55.5%. So a couple of points less. But in 2024, it was up closer to 40%. So almost a point more. Is there a reason why you'd want to own one wrapper or the other? Is there, for somebody who's out there goes, hey, I've been a long time blue chip growth shareholder in the fund, is there a reason to switch? Is this a case where, because you have it in both variants, you really want to dig in to look at both before you buy either?
So if you already are a longtime owner of the mutual fund version of the strategy and you're happy with how the fund is performed, which you should be because it's a 5-star fund according to Morningstar, it's had a great track record overall. You should do nothing but be hearing that you and I are talking about Fidelity blue chip growth in a positive manner. You should not sell one mutual fund to buy a nearly identical ETF for a little bit of the fee savings, because you have embedded taxes and capital gains that you're going to unlock, unfortunately, when you sell that mutual fund at any point. So if you're going to sell a mutual fund, it should be for the right reasons. Shifting strategies, the manager has left, it hasn't in this case, or you want to go to a more index-based approach. We think Fidelity Blue Chip Growth Mutual Fund's strong track record should be an indication to people who are believers in ETFs that don't currently have exposure to the strategy and want the tax efficiency, the liquidity, and the lower fee. They should, if you're a new investor, Fidelity Blue Chip, the ETF, is a worthwhile ETF to be considering in 2025.
I do know that we have a couple of members of our audience who are really wonky about their numbers, et cetera. And they would point out that because the ETF and the fund are effectively one and the same, just different, it's basically the same chassis, slightly different the way a Volkswagen and an Audi are the same chassis, just different from the top down or what have you. They would say you could move from one to the other and not trigger capital gains because it would be a wash sale, et cetera. But we aren't giving tax advice. We're just telling the wonky people, we understand what the rules are. If you think you can do it, you want to check with your tax provider. Don't yell at us.
Yeah, agreed. Not offering any tax advice, but for ETF-oriented investors, and that's likely who's listening to this conversation as opposed to having moved forward, waiting for somebody to talk mutual funds or to talk individual stocks. This is a worthwhile ETF. It is a actively managed large cap growth strategy with a strong track record as an ETF. The manager has the firm and the manager has a strong track record through the mutual fund as well. You get high quality, large cap growth companies, but the benefits of an active manager determining whether it's the right time to hold on to a position or the right time to sell it. So we think this is a great strategy from Fidelity.
And in terms of where this fits in a portfolio, obviously this is built to be a core holding, but if somebody's got quality ETFs, because quality has been a factor that they've dug in on, and you're focused on the quality in blue chip, do they not do this because it has overlap? Do you worry too much about the overlap with the big names, or this is a quality fund? It's a core position for somebody who's looking for a core position.
So I think this could be a core position for many people who believe in active management. Now you could pair this active ETF within a low-cost index-based product and split your large cap or your large cap growth bucket between the two. So you get the benefits of active management, but you're not paying as much for just one fund. You can split that with a very low-cost S&P 500 or triple Qs ETF that's a little bit more growth-oriented. This is not a tactical call. This fund has performed well the last couple of years. We think many people still want to get exposure to those mega cap growth oriented companies. We think you get the benefits of an active manager with a strong track record to lean on.
It's FBCG, the Fidelity Blue Chip Growth ETF, the ETF of the week from Todd Rosenbluth at VettaFi. Good one, Todd. I'll see you again next week.
I'll see you next week, Chuck.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And I am Chuck Jaffe, and you can learn all about my show by going to MoneyLifeShow.com or by finding it where you find your favorite podcasts. You want to find out about your favorite ETFs or what might be your new favorites, go to VettaFi.com, where they've got all the research you need to be a better investor. On X at Vetta_Fi, Todd Rosenbluth, their head of research, my guest. He's on X too, at Todd Rosenbluth. The ETF of the week is here for you every Thursday. Make sure you don't miss an episode by subscribing on your favorite podcast app. And we'll bring you another ETF to consider next week. Until then, happy investing, everybody.